Hello traders, and welcome to the week ahead from here in sunny California. This week we had a little bit more of the old status quo with daily EMA 12 continuing to hold us support. And so nothing is going to change for the bulls unless that changes. So this week I'm going to start off by going over a little bit of getting my mind straight for how I go about trading this market by looking at what's happened in the past and how that plays into what we're looking at right now. So let's kick it off. So when you zoom out on SPY, this is the weekly time frame chart. What do you notice? Basically, we have a long, flat beginning, and then we got some balance here for many years. And ever since then, we broke out of this balance. It's been up and a dip, up with a dip, up, a serious dip, up, dip, up, dip. Now, and then currently heading up again. So the trend is your friend, and I think the general thing that we need to continue to rely on and think about when we trade is that an object in motion stays in motion. So if you look at the history of what happened here on all of these serious dips we've had, they ultimately did recover. Now the dips can last a long time. In this case, going from December of 2021 to bottoming in October of 22 to finally getting back to where we were in December of 21 on January of 24. So 2 years, right? But ultimately recovering. And to my eyes, not that everything has to happen the way it happened before, but this was a very different downtrend than what we just had. This downtrend, this move down we just had was much more similar to this move right here. And this move right here, if you just look at what happened, like let's zoom in on it and take a quick look. Insanely fast rally, just a few weeks to get up here, balance, another move up, balance, another move up. And so come back to where we are now, insanely fast move down, very quick up, a tiny amount of balance, gapping up, more balance. It doesn't mean that what happened before needs to happen again, but you have to try to imagine, if you were just going to look at this and try to intuitively draw the picture of what happens next, it probably goes something like this. Up here, a little bit of a dip, and then more. That's probably what you would imagine happens. And so what are people actually afraid of happening, right? So let's zoom right in here, and I will put some fibs on here. Okay, so we moved down, and now we're seeing what the retracement is. And the laws of retracement state that once you get above the 50% retracement point, then as soon as you're up into this green half, the most likely scenario, if you stop somewhere up here, is that you then get a higher low down here. It's less likely to continue downwards. And so here's the scenarios that could play out from here. You come down, you go up, you could break right through and just continue up like I just drew, right? That could absolutely happen. Something like this. The next thing that could happen is you stop somewhere before you get to this top, you stop somewhere in here and you start to come back down. Now, like I just stated, the most likely scenario if that happens is, finding a higher low somewhere here and then continuing to tighten up or something like that. But let's just say it doesn't do that. There is the chance it could just roll over again and you could start to get into a real downtrend, something like that, something more similar to this, which would ultimately, if the chart continues in the trend it's on, would ultimately find another bottom and continue back up. The most likely scenario, if it does stop below it gets to the top here, is a tightening range. This is one of the most common patterns in trading, where you get your high, you get your low, you get to stop somewhere up here, then you tighten up for some period of time before ultimately resolving a direction which, if the trend continues, should be up. Okay, so that's the most likely scenario if we stop before we get to the top. And so how do we deal with this understanding of the market overall on the daily time frame? And this is something I've been struggling with. I thought I sort of had the answer last week, but I didn't have an awesome week again. And so I want to talk about what happened this week and what I missed. So first, let's do a little bit of a history lesson. What happened last Friday? Last Friday, we set a daily high or low. Let me just draw it on here. Okay, so here's what we have in the last little while. So we have a low, high, higher low, higher high, higher low, higher high, higher low set the same day. And now remains to be seen, are we going to get a higher high? We're actually currently an inside bar, but you see the pattern. Currently an inside bar on Friday. Prior Friday, over here, we did set that higher low. And on the weekend video, I was kicking myself a little bit, saying that I have an approach for how I can make sure I don't miss this again. And then this week I missed it. And so I want to talk about, why did I miss it and what I should be doing to make sure I don't miss it in the future. So now I'm going to zoom in a little bit. And I have this moving average here, daily EMA 12 on this 1 hour chart of the QQQs. Okay, so I've got this moving average on there, and I have the color filling in between price and the moving average: green when price is above the moving average, and red when price is below the moving average. Okay, this is just a nice way to sort of get a better, clearer picture of where in the trend you are. If you're seeing the green between your candles and the moving average, the trend is up on the daily time frame. And of course you can see that here with the moving average, but to me there's a difference when you can just visually see and understand when you get stretched away from this moving average to the upside. You see that expansion and you see all that green space, that open air. And so on Thursday, when there was all of this news coming out that was causing negative sentiment in the market, caused Tesla to roll over very, very deeply, and even caused QQQ and SPY to move over, to roll over, right? This was a scary day for a lot of people. And the sentiment is really bad when things start to roll over and get extreme to the downside and move this quickly. And Tesla was, you can see the difference between Tesla and QQQ here, where Tesla is in the red, right? It's in a downtrend now. So it's a very different situation and even more scary to the downside. As the president and Elon Musk were trading comments, I'll just say comments back and forth to each other. Now, the thing to do as I'm looking at this is I have to keep this zoomed out view of every time that price comes in towards this moving average, that is a gift, right? We are in an uptrend. And when you're in the uptrend, the further you get away from the moving average, the less likely that a bullish trade will work, and the closer you get to it, the more likely that a bullish trade will work. And so right here, you see this was the prior Friday, which was a low that probably I should have been buying. And then here we had Thursday, where we actually got a nice bounce into the close and then went lower into the after hours. And I'd forgotten that this is a trade I used to do, months ago, as we were in the bull market for all that time. During this entire move up, I was doing that trade where when we get gaps down towards the EMA 12, I was and price would then continue in the after hours, I would buy that. Now this isn't financial advice or anything like that, but I just wanted to share, like, this was a tactic I had, was to, especially on a day like this where it's news driven, the sentiment is really bad because of headlines that are coming out and something that's everybody's watching and people are very fearful of. That can drive price right down into the after hours. But remember, staying zoomed out, we are in a bullish market. That's an opportunity. Now, if I'd woken up in the morning and we had gapped down even further, that's something you have to take into account. It's definitely something that could happen, and you need to be prepared with a plan. Are you, if you're buying equity, for me personally, that's most of the time what I'm doing. If I'm buying equity into the after hours like that, then I'm betting that it's not, that I'm actually going to open within the range of the prior day the next day. And that bet is just based on seeing this happen over and over and over again as we're in uptrends. Now, yes, there's a chance the opposite could happen, and you could end up going below the daily EMA 12 and gapping down. And so you need to have that as part of your plan. Like, how much are you willing to risk? How deep are you willing to go? And take that into account, that you're not going to have a stop overnight while the market is closed. The other option that you could do is, if things are moving down towards the EMA 12, you could just be buying this with options. You could make a call, and you have a defined risk, which is your entire premium, and you probably wouldn't lose at all, even if it did go lower. And you're betting that we're towards the EMA 12. This is a place where I know I should be buying, and you make your trade. Now, this was happening in the after hours, so you can't buy options in the after hours, not that I know of. And so, choose your method of making the trade, and whatever works for you. But this is something that I was really kicking myself over when I woke up on this morning and saw that we were back up in range, because I was like, oh my God, we're in that market again. I can't believe I missed it. This is the market that I love. I'm used to trading this market. It's just been a while. And so, yeah, I think going into this week, I'm going to not do what I did last week. Last week, I spent a lot of time chasing momentum on different names. this week, even though I just missed a daily higher low. That's just on QQQ. My goal this week is to catch a daily higher low on something. I don't care if I need to be patient and just keep waiting. That's what I'm going to do. And I'm going to stay zoomed out on the charts that I'm interested in buying on to watch that and see if we're getting near the MA rider that I'm watching, and then zoom in and try to find the right way to get involved in that trade. So that's it. That's my whole thing for this week. There's not a lot of new information. With basically status quo as far as daily EMA 12 remains support. The bulls have complete control. Just look at all that bearish sentiment that we had on Thursday and what happened on Friday, back to the highs. If you find yourself getting overwhelmed and fearful, zoom out and look at those daily moving averages that you watch. And by the way, it doesn't need to be the daily EMA 12. Maybe you have the 8 EMA, or maybe you're a person who trades with the 5-day simple moving average. The point is, find the moving average that works for you, that you're comfortable with, and find the charts that are riding that moving average in a way that makes sense to you, and just wait for the trade to come to you. And that's what I'm going to try to do this week. So simple statement for the week: as long as daily EMA 12 remains support, then the bulls have complete control. And until that changes, we have to assume that this trend that we've been on, that we overall have been on for a long time, is going to continue. And once it breaks, if it breaks, then we can reevaluate. But until then, the market's trending up, and we should be trying to get our daily higher lows. Have a great week. Hey everybody, if you like my indicators on TradingView and you like the content I'm producing here on this channel, please remember to like and subscribe.